Welcome back to another video on the Finance Value Guy, and in today's video I wanted to just quickly talk about something that this channel was meant to be about. Basically, I wanted to talk to you all about Michael Burry's recent statements because they are definitely very interesting, and I do want to say that we definitely need to discuss exactly what's going on in the markets. And as you guys can see by this recent tweet, Michael Burry has stated, okay, that I don't want to say it's exactly game over, but he said, okay, people always ask me what's going on in the markets. Okay, it's simple, the greatest speculative bubble of all time in all things, okay, by orders of 2 magnitudes. Now basically what he's saying here, okay, is that pretty much every single market current on right now is very speculative, guys. And if you haven't been paying attention to the macroeconomics of the world right now, especially in the US economy, things are going to a crossroads, guys. Like, we are at a point where things are seriously just ridiculous. Like, that's the only word I have to describe it. And you should all pay attention to what Michael Burry is saying, because we all know, okay, he's the one that previously has predicted the housing bubble crisis in 2007 when no one else could have that foresight. So we definitely need to pay attention to what he is saying now, because when things like Twitter are really popular, we can definitely have an insight to what these hedge fund managers and these wealthy individuals who have the foresight to see the crashes are saying firsthand. So also, he did actually, you know, hashtag flying pigs 360, which is something that you guys should pay attention to, because it basically means that, of course, you know, pigs get slaughtered. So take note of that. Now when we go on to this next slide right here, you guys can say of course, the hashtag was saying bulls make money, bears make money, but pigs get slaughtered. And he's repeatedly told investors that people are, you know, speculating. Okay, when you see rampant and wild speculation just before a melt up of the stock market, you can definitely expect some kind of pullback. And this is going to happen in possibly every single financial market that we could be seeing. You guys know, if you've been paying attention, you'll know that the housing market is on fire, the crypto market is on fire, the stock market is on fire, guys. We have 3 major markets that are all piling up right now. And as you guys can see right here, everyone, I'm pretty sure, who's watching this video knows that Michael Burry was the one that predicted the major economic crash. So right now, this is why I'm saying I am definitely very cautious when it comes to investing, because when you have these alarm bells that have been ringing for quite some time right now, we need to understand the risks that are coming with investing. Okay, now when we continue on with this slide, okay, this is what I said. Okay, this is why I'm paying attention to what Michael Burry has said, and I'm glad that he is back on Twitter, because seriously, guys, you have to understand that previously the SEC visited his house, and maybe they did some kind of enforcement, or where they didn't want him to talk about the, you know, true levels of inflation, and he deleted a bunch of tweets. But we still have that information, and I've made videos on this in the past. But as you guys can see right here, people say I didn't warn last time. I did, but nobody listened. And I can tell you guys now, I'm definitely going to be listening to Michael Burry. So he's warning us this time, and people still are not listening. But at the end of the day, the point is that right now we need to listen, and we need to we need to pay attention to exactly what is going on. So, okay, Michael Burry, what has he actually done so far? Okay, and how has he actually, you know, grown his portfolio? Because that is, you know, of course, what he needs to do during times like this. So he actually, you know, put bearish put on, you know, put options on Tesla shares, which have been profitable. And the iShares 20 years, you know, basically bonds. He's basically betting on bonds and the Russell 2000. So basically what he's betting on, okay, is betting on these bonds going down in price. And this is a huge bet on inflation, guys. And this is what we need to understand. Okay, when you are someone who is, you know, like an average person like myself, and you have a standard wage, or you make a standard living, you have to understand that over time, how the, you know, the government robs you is they do it through inflation. Okay, and stuff like bonds and stuff like that, these things will go down, okay, when the inflation does tend to hit. Now, of course, the bearish put option on Tesla wasn't anything to do with inflation. That was something to do with an overvalued stop, in Michael Burry's opinion, and so far he's been proven right on that again. But the point is, okay, is that, you know, betting big on the iShares 20-year bond going down, okay, like a bearish option, is definitely a big ballsy play. And I would say that so far we've seen these bonds go down simply because of the inflation that we are going to be seeing, guys. And the Federal Reserve is saying that it is transitionary, and we all know that what we've seen in the market so far is an insane melt up, and many different asset prices, and even companies like Coca-Cola, for the first time in a couple of years, are increasing the prices of their products. So also what we can also see, okay, is that he also has placed bets on the ultra short 20-year treasury. And basically what this is, okay, is this is something that you can you know, it's inverse. Okay, so basically what this does is it's a leverage token, okay, and it does the inverse of what, you know, the bonds do. Okay, so what they do is it's an inverse. So basically if you buy it, it does the inverse. So basically if the bonds go down, this asset that you have, it goes up, and this is what you can do if you want to bet against inflation. And these kind of things are things that, you know, Michael Burry is betting on for the inflation that we are seeing right now. And I'm pretty sure he's probably sold out of these positions because these positions are really short. And as you guys can also see right here, if you look, you guys can see we got the daily 20-year treasury bear shares, and these are daily, so these aren't long-term positions. Then we also have the pro shares, the ultra short 20-year treasury, and pro shares and the ultra 20 short treasury shares. So they're basically bets on index funds, and it shows us, okay, that the inflation fears, okay, and the negative outlook for the long dated treasury bonds aren't looking good, guys. And this is not good at all, okay? And the reason why I say this isn't good, because this isn't good for someone like you or me, okay? Someone like you or me who doesn't own many assets, okay, are going to suffer the most, okay? The rich and the wealthy, people who own properties, stocks and bonds, not bonds in this case, but people who own those assets, okay, even including Bitcoin, are going to see rapid increase in these prices just to reflect that real world inflation, guys. And this is what we've seen in the housing market, even in the crypto market, and even in some of the long-term value stocks have seen that insane increase. And I guess you could say overvaluation, but it's not overvaluation. It just reflects the true levels of inflation that we haven't really seen in the market, okay? And what else is there, guys? Okay, so basically, of course, this is definition. Basically that, you know, of course, inflation is going to affect, you know, the interest rates. And of course, the higher the inflation goes, which we know it's going to be going higher, okay, the interest rates are going to be rising. And when interest rates rise, we know that the bond yields are going to fall, guys. And as you guys can see right here, this is the definition. Of course, I just brought this up for anyone that didn't understand. Of course, you know, a fundamental principle of bond investing is that the market interest rates and bond prices generally move in the opposite direction. When market interest rates rise, the prices of fixed rate bonds fall. And this phenomenon is known as interest rate risk. Now, of course, we all do know that all of this inflation is taking place back to the pandemic, okay? And the Federal Reserve is kind of handling this, some would argue, in a bit of a ridiculous manner by printing all of this money. Now, of course, we didn't want to go into another recession again, but some people would say that maybe we should just have a period of a depression so that, you know, the value of our money just doesn't completely decline, okay, with all this quantitative easing. So what we also can see here as well, guys, is that Michael Burry isn't the only person that is calling for this market crash, okay? There are many other people out there that are also calling for this market crash, and that is why I say this is something that is very interesting, okay? You have all of these people, okay, and if you don't know who Jeremy Grantham is, you're watching this video for Michael Burry, that is completely fine. But Jeremy Grantham, British investor, okay, he manages, you know, a hedge fund, okay, and he's been calling, okay, for this market crash. You guys can see 4 months ago now. This, of course, it does have 4 million views, okay, and this is a very, very popular video, and I would recommend watching this the whole way through. And he basically details, okay, why the next crash is going to rival 1929 and the 2000 market crash. If you're not familiar with the 1929 market crash, it was a huge market crash. 2000 market crash was basically a huge NASDAQ bubble, stock market bubble, tech market bubble, whatever you want to call it, that popped in the early 2000s / late 90s, and this was an insane bubble that many people did see coming. And guys, we could definitely be seeing another scenario like this once this melt up finishes, guys. And there is another investor, also one that is talking about this, okay, and this investor, okay, is the Contro macro strategist, predicts the final market melt up before the bear market to rival 1929, okay? So basically what they're saying in this article, okay, is that this is the melt up stage, guys. And the melt up stage is basically where you have asset prices like stocks, like crypto, like real estate melting up, guys, because of course, as we know, for any bubble or for any asset it needs to, you know, go up in an insane price before the price of the asset comes tumbling down. And this is what we are seeing, okay? And this was something that was written a time, like, I wouldn't say time ago, maybe sometime early 2020. And as you guys can see, the melt-up stage is now underway as markets recover from an initial sell-off caused by the coronavirus. Hunter said on the Contrarian Investor podcast, adding that he did not and could not have predicted COVID-19. But whatever the immediate catalyst for that sell-off is, it's clear that the market has put it in the rearview mirror as the global policymakers have predicted unprecedented monetary stimulus, guys. And there is stimulus that is going to keep on coming, okay, for I don't even know how much, but I am seeing so much stimulus in the US economy, okay, that it is definitely challenging the US's dollar reserve currency status, okay? And this is something that we have to pay attention to. And this is why personally, okay, when I was looking at Ray Dalio and what he said, he definitely said that holding a wide range of currency, especially certain currencies which are deflationary, could be a good and not deflationary, but that, you know, don't devalue with time, such as, you know, Singapore dollars and stuff like that, if you can find a decent mix of assets that you can gain exposure to, okay, you can definitely have a more balanced portfolio that won't be completely, you know, just I could say done. Now, this is something, okay, what Michael Burry talked about, this is something that I talked about on my channel quite some time ago, okay, and I talked about, okay, the true rates of inflation that we will be seeing, okay, and I want to show you guys this video I made 3 weeks ago, and this isn't insane news, this isn't something that is incredible, but I do want to just mention this because I do feel like a lot of people aren't paying attention. You know, a lot of people are paying attention to crypto right now, which is absolutely fine, but the video I made around 3 weeks ago, okay, it talks about how, you know, basically the reopening and the more stimulus is going to be fueling inflation, and I don't think there's a way around this. I don't think the Fed actually has a true scenario or a true you know, situation, and this is a video I released on May the 20th. Leave the link to this video in the description, but in this video I basically detail what Michael Burry has said and basically how he's deleted his tweets. As you guys can see, prepare for inflation. The investor said in a now deleted tweet on Thursday, reopening is stimulus, you know, an inflationary crisis, governments will move to squash competitors in the currency arena. And of course, okay, in this video, I talked about how previously, okay, Bitcoin, okay, can and may be squashed as a, you know, currency, and I'm not spreading FUD, guys. This is not me spreading FUD, but in a previous time of high inflation, okay, the government did ban gold, and I talked about this in a previous video where I talked about Michael Burry's ban on Bitcoin and basically how, you know, the government, when they realize that, okay, inflation is happening, inflation is here, what are they going to do? Well, they're going to move to squash other competitors in the currency arena because they don't want everyone moving their assets to, you know, stuff especially like Bitcoin when it's competing with something like gold or things that are valuable in the economy. And this is definitely something that you guys need to pay attention to, because yes, crypto markets are hot right now, but this is something that could be happening. And if it does be happening, you know, you don't want to be in that situation where your money is much less valuable, you don't own any assets, your portfolio risk is just very, very skewed. You definitely want to be in a situation where you can look after yourself and benefit possibly from the scenario, okay, because at the times of crisis there's always ways to benefit. So as you guys can see right here, remember the financial crisis of 2008 where so many people got shafted, okay. You know, this book, okay, that I was summarizing, basically, you know, Weimar, and I would, you know, I wouldn't say read the entire book, but I would say just look at the webpage, okay, and it basically talks about how, you know, central banks and governments deliberately make the money in your pocket less valuable, the next crisis is coming, okay, and how, you know, like currency and stuff changes. It definitely changes in times of desperation. So at the end of the day, this is something that Burry has highlighted. Burry highlighted passages from the book about the recurrence of inflation throughout history, and it's usually preceded by an economic boom and a spike in overnight fortunes, okay? And overnight fortunes are something that we have seen very, very recently, guys. And these economic booms is something that we definitely did see, okay, after COVID. Booming the housing market, booming the crypto market, although the cycle did line up pretty perfectly, but we've seen a boom in the stock market, housing market, and the crypto market, which is definitely, it's definitely insane, guys. There is a asset bubble just on possibly every single metric. So we need to understand this, and we need to do our best bets to hedge against inflation right now. And as you guys can see, this is something that you know, I talked about history not is useless. You know, this text explores the 1970 and how it's got very, very huge parallels to today, and I would recommend you all talk about, you know, this insane. So with that being said, if you did enjoy today's video, don't forget to like, don't forget to subscribe. I'm gonna be making videos like this all the time, but you know, I did want to produce this video because I thought that it was very important to address some of the major concerns that we are going to be seeing in our economy